Do you know how many times I reshoot these intros? Anyways, investing or speculation, that is the question of the week. I've seen a ton of renewed interest in investing due to GameStop's newfound popularity, in addition to BlackBerry, AMC, and a few other of these hot good investment choices. For those of you new here, my name is Forrest. I invest in stuff and I think that you should too. Today's topic or discussion is a very, very important one, especially for all of you people who are really taking your first step into the market. And there's something that I really want to succinctly say, or I guess the whole point of this video, maybe if you don't want to watch the rest, is that if you're just getting into the market and GameStop is the first thing that you've bought, you are not an investor, right? If the first thing that you've bought is BlackBerry or Bed Bath & Beyond, that's not investing. That is speculating. You can make money speculating, and that's okay. People speculate all the time, doing all types of things, but it's important to know what you're doing for a few important reasons, not because I want to beat you over the head with self-righteousness or say you don't know what you're doing, mostly because of the risk associated with it, right? So typically when we talk about investing, making an investment choice is basically saying that I believe in the long-term outlook of this entity. That could be a company, it might be a cryptocurrency, it might be a mom and pop business that you throw $100,000 into the partnership as they open their doors. Whatever that is, you're investing. Speculating is much more concerned with explosive, outsized near-term growth, and really there is an outsized, I'd say, relationship between risk and reward that isn't nearly as much focused on the fundamentals of whatever is happening with that underlying asset or entity, right? Now, just to be clear, I do both. I am a long-term investor. I think that everybody should do long-term investing, and that's kind of like the foundation of my portfolio. That includes my retirement accounts, 401ks, things like that. There are a ton of people out there who are like, you shouldn't have a 401k, you shouldn't have yada yada, whatever, that's fine. Everybody can do what they want. I think everybody, if you have a job, you should max out your 401k. If you can, do a self-directed IRA. Having money only gives you options, and having that security is a great thing to fall back on as you do all of your entrepreneurial endeavors and or swing trading like I do, and or speculation. This is important because if this is the first step that you're taking into the market and you're using GameStop's truly like once in a lifetime returns as your expectation for what the market is going to give you, you're going to be exceptionally disappointed, right? This is truly a once in a lifetime event. I have been investing for, I'd say, since I started my career. I started my career at a retail brokerage, which is where I really learned the markets and above and beyond the way that most people don't understand them, because I had the opportunity to, get my Series 7 and be surrounded by brokers and people who are talking about equities and investing every day. But this really is a once in a lifetime thing. This is on average, or I guess for reference, if you thought about what the market normally does, and if you're just a long-term investor, the market on average returns like 7 to 8% per year, which is good. That is good. If you just invest, a couple $1,000s a year into the market at 8% compounded, you'll be a millionaire still. You'll still be a millionaire. It'll take you, 20, 30 years, but you're still going to be in like the 99th percentile. A lot of people, think about that amount of time and they say, oh, I don't want to do that, or I don't want to wait till I'm old to retire. Well, guess what? If you don't do anything, you're going to be old and you're not going to be able to retire. And that's just the fact of the matter. So really the message that I want to get across here in this video is you need to have a level of financial acuity and just basic education that goes into speculation. It is very unlikely for you to be excellent at speculating if you don't understand basic investing. It's very possible that you'll get lucky, as some people have, including myself, right? I was in the right place at the right time. Part of being active in the markets every day means that when these random occurrences pop up, that I'm there to play the game, right? But I'm not gonna act like I had some, outsized genius like premonition that I was like, oh, I should go all in on GameStop, because I didn't. I only put $5,000 in. If I knew it was going to be this explosive, I would have went all in and I'd be a multi-millionaire by now. But I'm not. I'm up a couple $100,000, up like 340 grand right now due to a local dip. but you get my point. Let's actually just touch on these really quick. Investing is basically looking at a company. I like their product, I like their management, I believe in their long-term growth, I want to be a part owner of that company, and so I'm going to invest in that company and ultimately reap the benefits of their long-term business outcomes. So trading is basically where you're saying, I don't care about this particular company at all. All that I'm really interested in is how I can make money on the price movements, right? So all equities have a measure of volatility. There's actually ways that we actually measure and account for that volatility. But a lot of swing trading and day trading is really looking to volatility as a way to make money. So if I know that in general this stock, say, just for the sake of example, swings plus or minus 10% every other day, I can buy low, sell high, and I'm gonna make money on that difference. Pretty simple, right? Also, I could buy the rumor, sell the news. These are some very high level, kind of simple examples. It is not that simple. That's not how the real world works at all. Part of my strategy really is looking at things that I think are going to be explosive on some future news event that are actually kind of undervalued in a sense, and then I do mid to long-term options plays on those. So I'm an options trader, but I don't really like weeklies or things like that. I really like to go all in on some mid to long-term plays, which in my mind is a few weeks at least to a few months to even a few years, where the volatility is likely to increase due to popularity gaining over time. Enough of my strategy. The last point is speculation. So speculation, which is something I do a very small amount of, but I do it. Speculation is where you're like, here's some company. It's super cheap. Maybe it's I don't know much about it. It's a penny stock. I'm just gonna throw $500 here because I can afford it and see what happens. And maybe this random company that I know nothing about, maybe they have some exceptionally outsized return, maybe they actually break into their niche, and my $500 turns into $40,000, right? Because I own a couple thousand shares of whatever it is. This is a great way to lose money, by the way. There are so many companies out there, and if you go and look at over the counter markets, you'll see all these penny stocks that people think are good investments because they're cheap, but the reason that they're cheap is because they don't have a lot of value. Obviously, a company could infinitely divide its shares so that the stock price goes down and down and down, but generally they don't. People only do stock splits for liquidity, and if you don't understand what any of that means, then you're watching the right video and you're truly not ready to be making these plays, right? So the point is, these things are cheap for a reason. If you are going to buy them as an investment, then do so, but understand that throwing random money at cheap stocks because you think that they might explode into the dollars truly is speculation. It's very similar to gambling in a sense. Gambling, you just lose your money much more quickly. In penny stocks, you'll tend to bleed out over time, and really you'll just end up that 500 will turn to 400, will turn to 300, will turn to 200, will turn to 100, and that can go on for years, honestly, as these companies struggle to break out into their space. So what do I do, Forrest? I feel like you're just beating me on the head with all this stuff, saying I'm not ready. I just want to make money because all these people are making money in GameStop. Hey, I get it. I did it too. And I want you to make money. That's the whole point of my channel, is for you to make money. Again, my name is Forrest. If you missed that on the channel title, I invest in stuff and you should too, but I want you to invest. I want you to be an investor. I want you to, at least at a bare minimum, have this blanket level, foundation of, financial education so that you can make smart investment choices. Or if you are speculating, you understand the risk. The thing about GameStop that you have to understand, as well as AMC, which doesn't have nearly as much of a short interest as GameStop and has far more shares, right? It's far more liquid, which means that the bid-ask spread is always going to be much lower because the market has more participants, right? These are all huge factors in price action, volatility, and the way that these things can move and possibly could move. AMC will not move like GameStop. It just, the factors aren't there. It just won't. I think that it could climb. I'm personally not in AMC. I might buy back in if my thesis about it changes, and other people might make money on it, and that's okay. But my point is, you need to understand these fundamental things so that you can make informed decisions. What will happen, and as I've seen happen, is that people will make a lot of money, but because they don't understand how and why they made it, they will then immediately after that lose a lot of money, if not more than they made, because now they doubled down on similar risk profile plays, not understanding the risk associated with those plays, assuming that everything was going to play out like the first one. So do your homework. It's the weekend, you have time, understand how equities work, understand, what short interest is. If you don't understand why people have to cover their shorts, you need to figure that out. If you don't understand what gamma is, what delta is, some of the historical short squeezes that are out there. If you don't understand how the number of shares outstanding affects liquidity, these are all things that you can answer before Monday's open. And at a bare minimum, if I had to TLDR this whole video, or maybe too long, don't listen or watch, it'd say that any money that you put into GameStop, you very well might lose. You might make a lot, but it very well just might go to zero. I'm willing to take that risk. Maybe you are too. But in any case, that is it for this one. I hope that you make some money along with everybody else. If this is your first time here and you appreciate this video, go ahead and hit the subscribe button. If this is your second time here, go ahead and share this video with 5 to 10 of your friends. Also, if this is your first time here, like I just said, also share it with 5 to 10 of your friends. Either way, I appreciate you. Thanks for stopping by. My name is Forrest. See you in the next one.